Hey, how's it going everyone? Welcome to another Art of Crypto video. On today's markets, they're up by 5%. The markets are all in green. It's up to 1.97 trillion in terms of market cap. Bitcoin is up by almost 5%. Ethereum always sees an amplified effect in terms of the market cap. If the global crypto market cap goes up by 5%, it always sees an increase in the market cap greater than that. So in this case, it's 7%. BNB by 9%, Solana by almost 10%, Avalanche by 10%. So looking at the top 50 coins, all of them are up, and it's a good sign. I believe with the rate hike coming up in March by the Federal Reserve, a lot of people are now hedging their risks. They're increasing their leveraged portfolios in order to protect themselves from any price movements or from where they predict the price is going to go. So if they predict that the price is going to go up, they'll long. If they predict the price is going to go down, they're going to short. And building on that, the leverage ratio has shot up. This is quite a significant increase if you look at one-day change. As I said before, people are starting to leverage themselves against a possible rate hike. People are possibly buying a lot of shorts just to protect themselves in case the price of the cryptocurrency, especially Bitcoin, goes down. But I think that also a lot of people are going into long positions, and this is mainly because they think that, the rate hikes have already been priced into the spot markets. Since that's the case, when the rate hikes come, there won't be much of a movement in the market. So they're betting that the price is going to go up since the bad news has already been priced into the market. So looking at leverage, it has gone quite a bit up. I think that in the next few days, especially before we reach the first week of March, this leverage ratio might reach these levels, maybe 0.25, beating all-time highs or reaching all-time highs. So we have to stay tuned and we have to see how the leverage market develops. So building on what I said before, crypto investors are hedging out risks ahead of March rate hike. So the rate hike is already priced into spot markets, according to Telegraph contributor Michael van de Poppe, but the longer-term effect it will have is still unclear. As a result, Glassnode observed that investors are taking steps to protect themselves from what this downside may mean in the future when the rate hikes come. It appears that investors are deleveraging and utilizing derivatives markets to hedge out risks and buy downside protection, with a keen eye on the Fed rate hikes expected in March. And while the data shows that an objective flat area on the futures term curve is present, it suggests somewhat subtly that investors are not expecting sort of a significant bullish outbreak through the end of 2022, and the annualized premium on futures is only at 6% at the moment. So the annualized premium, basically what it is a value above the dollar futures rate that a person will pay for the risk of a futures contract. And a higher premium means a higher risk appetite, and there doesn't seem to be a very big risk appetite at the moment with only 6% premium, which means that they don't see much of an upside. Crypto is a risky asset, so if there's an expectation of an upside or a bullish sentiment, we will see a more risky appetite. We will see this annualized premium on futures increasing to above 10 or even 15%. But this isn't the case. People are trading cautiously. I think Bitcoin might go up. I think it will go up given all the developments in the crypto industry or the crypto universe. But at the moment, people are quite wary on where they're going to put their money at the moment. The markets are trading sort of one day up, one day down. You saw yesterday we saw a 7% decrease in the markets, and then today we saw a 5% recovery, which means that volatility puts fear into people's minds. And at the same time, they're also fearful about the rate hikes and what this could mean to both traditional and the crypto markets, because with rate hikes, there will be less free money in the market, less money flowing into crypto, and a lot of fear goes behind that. However, there is some good news in the horizon. Due to an interest rate reversal, for the next 10 years, you're guaranteed to lose money owning bonds. So if you own bonds, you're guaranteed to lose money on its intrinsic value because of any rate hike. So the higher the interest rate, the lower the value of your bond. This is because how the bond price is calculated is through an interest rate calculation. So if you have a 10-year bond, you calculate its intrinsic value going forward 10 years, and then you get its present value by dividing it by the interest rate. And the higher the interest rate, the lower the value of your bond. And this is what will happen in the future. So they say that 60 trillion is likely to go into crypto from the bond market, where investors can continue to earn yield that matches or may even outperform the yields that earn from bonds. And the market cap is currently sitting at 2 trillion. If 60 trillion flows into crypto, don't you think that this will cause a massive bull market for the next 10 years? So with this, and especially since interest rates are going up and bonds are becoming less profitable, even if it's not 60 trillion, I believe that a lot of money is going to flow into crypto from bonds, and the crypto market will outperform both the bonds and the stock market. And looking at exchange outflows, they continue. Despite market participants clearly shedding risk ahead of Fed rate hike, Bitcoin outflows from exchanges are still vastly outweighing inflows. And for the past 3 weeks, net outflows have reached a rate of 42,900 Bitcoin per month. So a lot of Bitcoin is leaving exchanges to private wallets, either hot or cold wallets. This is a bullish sentiment, meaning that they expect the price to go up. If Bitcoin is taken out of exchanges, it's to safeguard it. It means that people want to hodl, they don't want to sell it. Also, long-term holders of Bitcoin, those that have kept their Bitcoin dormant for at least 156 days, are maintaining steady control over the circulating supply by holding about 13 million Bitcoin out of the total of almost 20 million. And since the October 2021 high, long-term holders have relinquished only 175,000 Bitcoin out of 13 million. And I mean, if that doesn't tell you that the markets are very bullish in the long run, I don't know what does. There is an overwhelming support for Grayscale BTC Trust ETF conversion proposal. So the US Securities and Exchange Commission, so the SEC, has allowed comments and feedback on a proposed change that would convert Grayscale's Bitcoin Trust to a spot-based exchange-traded fund, so a spot from a futures ETF to a spot ETF. And a majority of the people that have commented are in approval of this. Over 95% say that let's do it. Several respondents has argued that the regulator has already approved futures-based exchange-traded products, so a spot-based product should logically come next. And the US risks falling behind other countries such as Canada, which has already approved such investment products. So a spot-based fund would be physically backed by the asset itself. The amounts in the fund would have to be represented by the equivalent value in Bitcoin held by Grayscale, as opposed to backing by futures contracts from the Chicago Mercantile Exchange, which is how existing Bitcoin ETFs operate. So this will change the whole dynamic of Bitcoin ETFs from being backed by futures to being backed by the physical Bitcoin itself. And Grayscale's Bitcoin Trust has been trading at a massive discount in recent months as investors speculate and hedge on the ETF being approved by the SEC. At the time of this article, so today, the fund was trading at a discount of almost 25%. This means that with the Bitcoin currently priced at almost 44,000, the discounted fund price would be equivalent to around 32,500. And this is a very interesting thing, because a lot of people are going to make money if the Bitcoin Trust ETF is converted into a spot ETF, because now it's trading at a discount because people are expecting it to be converted into a spot ETF. And once it's converted into a spot ETF, the price might shoot up to from 32,500 to an equivalent spot price of 43,600. Whoever's holding the futures BTF at this point is going to make massive returns. So it's uncertain if they're going to convert the ETF, or if the SEC finally approves of a spot ETF, will they have to create a new one? And if they have to create a new one, then this falls moot. The fund will continue trading at the discount, while the new spot ETF fund will trade at the spot price. So Coinbase's Super Bowl ad crashes its app. During the telecast of the Super Bowl on February 13th, so 2 days ago, cryptocurrency exchange Coinbase Global ran an ad that generated such massive traffic that its app crashed. For a full 60 seconds, the ad consisted of a colorful, bouncing QR code that, when scanned, brought the user to a promotional website where, as part of its Less Talk, More Bitcoin campaign, new customers who sign up by 15th of February will get $15 worth of Bitcoin. And I think that a lot of people used this link because the website crashed, and at this point, Coinbase got a lot of new customers. Obviously, that's to fork out the $15 worth of Bitcoin to each one of them, but that's nothing compared to the revenue that they're going to generate through the trading of these new users. Linking to the previous article, Coinbase plans a 2,000 employee hiring spree this year. They have a lot more customers now due to that ad. I'm sure that there have been a lot of signups in the last 24 hours because of that $15 deal and the fact that they promoted their company in the biggest sporting event in the US, which is the Super Bowl, and enough people went in to crash the website. Surely they have to upgrade their infrastructure, they have to upgrade their teams, and they have to upgrade their offerings in order to keep up with this new influx of customers of all types of demands, whether it be cryptos, whether it be metaverse, whether it be NFTs. They have to cater to everyone now. And they want to hire up to 2,000 people to expand its product engineering and design teams, which make a lot of sense. And they'll also add products to expand its offering in hosting general content such as NFTs and the Coinbase wallet. This is because, as I said before, new customers need new products, need expanded infrastructure to handle so much traffic going to and from their platform. Canada's Justin Trudeau Enacts Emergencies Act, and crypto is included. So responding to the weeks-long trucker-led protests that have snarled streets in Ottawa and blocked key crossings at the US-Canada border, Canadian Prime Minister this afternoon invoked the Emergencies Act for the first time since the law passed in 1988. The government appeared to set to take aim at protesters' finances. Speaking alongside Trudeau, Deputy Prime Minister Chrystia Freeland said that banks can immediately freeze or suspend bank accounts without a court order and without fear of civil liability. So this is a form of intimidation. This is a form of threat that says that if you don't stop protesting now, we're going to freeze your bank accounts and take all your money until you stop. And it's something that works very well because once you go for people's finances, they tend to back down. And it puts a very, very big question mark in such a democratic country where freedom of speech is allowed. They're invoking such Emergencies Act in quotation marks. Is it really fair? Are people not allowed to protest anymore? But that's getting a bit too political. What's most important in this article is that the government is broadening the scope of Canada's anti-money laundering and counter-terrorist financing rules to now cover crowdfunding platforms and the payment service providers they use. These changes cover all forms of transactions, including digital assets such as crypto. These transactions, including crowdfunding using crypto, is included in the Emergencies Act, and it can be frozen. The proceeds of these monies can be frozen. And why they did this and why they amended the financing rules is because fundraisers for the truckers have raised so much money, and a lot of that is in cryptocurrencies. For example, a Tallycoin Bitcoin fundraiser raised more than 20 Bitcoin, or nearly $1 million for the truckers. And ever since this financing change has been announced, the organizers shut down the fundraising page and are asking for all to stay tuned about the next steps. So obviously they're taking aim at the people that are protesting, and they're taking aim at these fundraisers that are mostly funded by Bitcoin and other cryptocurrencies. So that's all for today's video. Thank you for watching. If you like the video, please leave a like, please hit the subscribe button, share the videos with your family and friend, and I'll see you tomorrow for the next one. Invest wisely and cheers.